So we're going to just sort of invite management to join us, talk about this, and we'll come back to you because there is so much else to discuss because you had many movers on Friday and we want to understand whether there is some follow-through which is going to happen as we move forward. So Orient Technologies is the company that we're talking about. It's a recent listing, and they reported their first quarter numbers last week. Revenues have come off about 17% sequentially, but they're up 27% on a year-on-year basis. Mr. Ajay Sawant is Managing Director at Orient Technologies. He's joining us right now. Now, let me just quickly tell you, for the uninitiated, Mr. Sawant, good morning, sir. Thank you for joining us. So it's an IT infrastructure data center solutions company. It offers servers, storage, active and passive networking components, sort of collaboration solutions, and et cetera, et cetera. I mean, it's got all the right words in it in terms of what's doing well and what the future is going to look like. So, Mr. Sawant, why don't you? I think it's the first time we are talking on the channel. At least I'm speaking with you. Before we get into the quarterly numbers, tell us a little bit about yourself, the company. I mean, the big dominant drivers for the company in terms of the areas you're in, the end-use markets, et cetera. Go on.
Morning, and thank you for having me on the CNBC. Let me start with the Orient journey. We started way back in 1997. Orient Technologies was formed way back in 1997. And last 27 years that we have been in this industry, we take care of end-to-end IT products, technology, and services. Our dominant piece is more to do with the services perspective. We give on-premise as well as services on cloud. So cloud and data management is something which we are focusing more and more, and the services is our masterpiece. So that's where our USP stands for.
So what kind of services, Mr. Sawant? And yeah, go on.
Mainly on the data center services that we are pioneered on. Plus we take care of end user computing, plus we take care of the cloud servicing, and of course the analytics and mobility services that we take care of.
All of your revenue, so there is data center capacity in India is in a very nascent stage, right? I mean, what, 1,500 megawatt capacity, right? I mean, the defined by
and it's growing rapidly.
It's growing rapidly and projections are very high. So all of your revenues are dependent on data centers?
Either on the data center or on cloud. So we, as I said, we give services both on-premise, hosted, as well as on the cloud itself. So all the services that we provide on the AWS or Microsoft Azure.
And so your revenue, got it. Your revenues are a sort of one-off. You sell, it's not a product that you're selling, right? I mean, it's an annuity kind of a business? Absolutely.
So our 35% of the revenue comes as a ARR revenue, which we call it as annual recurring revenue. 45% of the revenue comes from solutions, which we provide on-premise, which is on the data center or on the end-user computing. So 45% of the revenue comes from the solutions perspective, but main coming from the services, which gives us a healthy margins.
Sir, just to push that point forward to get an exact breakup of the revenue pie, Mr. Sawant, if you could break it down into how much is coming from, let's say, cloud, how much is coming from data centers, and you also have things like facilities management, which I don't think, I mean, typically when we talk about IT services companies, I mean, facilities management is a very different aspect of it. Then you're, I think, also looking at getting into something known as DaaS, our colleague Rima tells us, which is devices as a service. Yeah. So again, what is the contribution here? What is the whole revenue pie?
Okay. So let me divide the entire business into three different line of businesses. First, we already discussed IT solutions perspective. So where we give you more of end user computing and data center solution, which I said the contribute to 45%. The 35% comes from my IT enabled services, where facility management services, multi-vendor services, renewal services, sustainable services, and subscription-based services, which we come from, where we dominantly focus onto the managed services, which are shared services, which we deliver through our NOC. We are building our SOC also. We are already acquiring space in MAPE to build our SOC. the new services that we are talking about, for which we have raised the IPO proceeds will be used for this services, which is called DaaS, which we call it as a device as a services. So most of the customers are buying IT equipment as a capex, and they see it as a, it's an investment in the business, and they see it as a more and more capital intensive revenue. To facilitate them, we are trying to move from those capex investment into a opex investment, which we call in our organization as a consumption based services. And that's where the DaaS will play a major role, so that rather than putting it into assets coming into your books, it will be more of expenses coming into your books. And that's where the customer will feel more comfortable to use more and more IT products. And that is the idea of getting into the DaaS services.
Got it. All right. Hi, Ajay. Good morning. And thanks a lot for neatly outlining your entire business for us. Let's get to a couple of numbers then. I'm looking at it in the last couple of years. You've been growing at low to mid-teens in terms of growth. You've started the year with a year-on-year growth of in excess of 25%. Do you think that you can keep up this sort of a momentum? What kind of a guidance could you give us for FY25? Point number one. And margins have been in the vicinity of high single digits, around 9% or thereabouts. What's the guidance on that front as well? Two numbers.
Perfect. So if you see our quarterly numbers, which are just published on Friday evening, if you see the overall revenue perspective, we moved from 116.9 CR to 148.84 CR. So that's a huge jump of around 27.32% in terms of revenue. From an EBITDA perspective, if you would have seen, we have grown from 10.61 CR to 13.65 CR, which is approximately 28.56 perspective. And if you see our PAT, which has been grown from 7.13 crore perspective to 9.28 crore perspective, which is a 30.21% jump in the PAT.
Ajay, sorry to come in, Ajay. Ajay, we have these numbers, what you reported in the past. Now
Correct.
We want to understand what's the way ahead. For the year, what can you do? The start has been great on a year-on-year basis. What's the outlook for the year? Two numbers, revenue growth and margin outlook.
So, so far we have not declared our advanced numbers, but let me tell you Q2 numbers, which we are at the end of the Q2, it will far, far better than the Q1. Okay, so we are expecting around more than 40% jump in the revenue in Q2 vis-a-vis the year-on-year revenue we are talking about, and even EBITDA perspective, there will be a huge growth. So after the IPO, we are very bullish about the business. India is growing and we are trying to capitalize on that.
All right, so for the year, we'll expect at least a growth of around 30%, going by the blockbuster start that you've had to the year. 25% and 40% is what you're talking about. So in the vicinity of 30% growth for the year, 25 to 30%, should we take that as an aspiration with margins in those high single digits?
30% year-on-year growth, you can take it. EBITDA will be in the double-digit percentage.
Double digit. Appreciate you joining in, Ajay. Thanks a lot for giving us color on your business, how you see things shaping up, and also giving us a couple of numbers to work with for the year as well.
Absolutely. And, as I said, it's a right cohort of businesses, data centers, and everything associated with it has been booming. And this is a very, very small company right now, with, of course, big aspirations, naturally. Let's take